A very good evening to all of you. It gives me immense pleasure to welcome you all to the 40th webinar of our series, Vasudhaiva Kutumbakam, being held today on 12th September 2025. Reaching this milestone is a testament to the collective commitment of our institute, the Institute of Cost Accountants of India, our SSB, the Sustainability Standard Board and its esteemed members, our distinguished speakers, and most importantly, you, our participants, who have consistently engaged with these sessions to exchange knowledge and ideas. Today's webinar is centered on a subject of growing global and national importance, that is, sustainability governance, CMA perspective. As we all know, that sustainability has moved from being a voluntary initiative to a central pillar of corporate governance and policy frameworks worldwide. Organizations are increasingly expected not only to deliver financial performance, but also to align with the environmental, social, and governance, that is the ESG goals. In this context, the role of the cost and management accountants becomes vital. With the expertise of CMAs in cost management, performance measurement, and integrated reporting, CMAs are uniquely positioned to guide organizations in embedding sustainability into their governance structures, decision-making process, and long-term strategies. We are very much pleased to have with us today to deliver on this topic, Mr. C.S. Jigar Shah. Briefly to introduce Sir. Sir is an esteemed fellow member of the Institute of Company Secretaries of India and a law graduate from Mumbai University, qualified as a CS in 2007. With over 17 years of experience, Sir has worked with renowned organizations such as MCX, Wellspan, and Datamatics before embarking on his entrepreneurial journey as a founder partner of JMJA and Associates LLP. As the founder partner of JMJA, Sir leads with an unwavering expertise and professionalism. He heads a team of 20 plus professionals managing compliance for a diverse clientele, including listed companies, startups, MNCs, and LLPs. Known for his ability to simplify complex legal matters, he ensures that clients understand regulatory requirements in a clear, non-technical manner. Beyond corporate laws, Mr. Shah is deeply engaged in evolving landscape of AI-driven governance and compliance. He actively explores the impact of artificial intelligence and regulatory frameworks, corporate governance, and risk management. Sir has also delivered sessions on how AI is reshaping compliance, automating regulatory reporting, and enhancing corporate decision-making. His profound knowledge on the Companies Act, coupled with his insights into the AI-driven compliance solutions, has made him a sought-after speaker and trainer. He has conducted enlightening sessions on various topics from corporate laws, ESG and CSR, to digital branding and the role of AI in modern governance. I am sure and very much confident that the insights shared today will help us all to deepen our understanding of how sustainability and governance can be integrated to build resilient, responsible, and future-ready organizations. I extend a warm welcome to our distinguished speaker, Shri Jigar Shah, and I look forward for an engaging and thought-provoking discussion now. Over to you, sir.
Thank you, madam. Good evening, everyone. I'll just share my screen. Okay. Good evening, everyone, and thank you, Aditi madam, for the wonderful introduction. And many congratulations to SSB and the entire team here for arranging so many sessions. I know it's a monumental achievement in itself. I've been through your lot of videos where you are covering wide range of topics. So I'm also hopeful that today's topic will help everyone. So just before we start the session, standard disclaimer that what we are going to discuss today is my perspective towards the corporate governance and the sustainability and about the ESG. So anyone has any queries, please feel free to ask in the Q&A session, or maybe you can share it with the team and we can try and share it whenever required. My introduction, I guess it's already done, so we can skip it. So I've just shared my email ID. If anyone has any queries, you can reach out to me as well. Now, I'll directly start with the topic. So, uh, just whenever I take a session on ESG, whenever we discuss anything about ESG, there are two very common questions that comes in everyone's mind. What is ESG? So, covered with sustainability, what is ESG? How do we do ESG? How can in India we can implement the ESG? That is the question that all of us ask. And unfortunately, many of our thinking has been linked with the work that is linked with some or the other degrees, qualification, certification, or something that is clearly visible result. So, for example, when I, as a company secretary, do the work, then for me, any certification of form, incorporation of company is a work. Anything other than that is not a work. So, similarly, when you look at ESG, the work is merely giving certain certification, which is currently majoritarily managed by a lot of big fours and the bigger consultancy companies. But then no one is aware in general like what is ESG, how we can contribute towards the ESG. So I thought I'll start with the basic about the ESG, the regulations, how the ESG has evolved in country, and maybe certain other thing that is linked with the ESG. So the first question is what is ESG? So I'm sure many of us are aware ESG, the full form of ESG is environment, social, and governance. So broadly, it covers the three aspects of the ESG. But before we jump into the ESG part and I can explain things in detail. So these are some of the images that we might see of India. So these are I've taken from the India Today's paper. So when you see the air in the left picture is not clear versus the clear air, all of us are suffering from the low AQI of or the worst air quality. Similarly, our rivers are polluted. Similarly, there is a deforestation that is happening where more and more trees are getting cut. So if we see these things on a personal level, so we understand a lot of stuff that needs to be done to reduce this impact on the environment. So that is where we are being asked to reduce the use of plastics, or what we call it as a RRR, reduce, recycle, and reuse. So we are being asked to do the avoid single-use plastics. There are things when we are being told that start recycling things, segregation of waste. Now government is taking actions on that level. Uh, Different bins are introduced. We are trying to clean the rivers. We are trying to clean the lot of stuff. Now education is happening at a individual level as well in the schools, and we are trying to make the impact there. However, covering everything, this will not create a major impact at an individual level. Like whatever I can do, I should do from my side. But how this will have a bigger impact, or like, is it possible to have a something more like at a corporate level? So that is where the corporate level reduce, recycle, etc., is called as ESG. So when we are doing individually, when we are trying to take care of the environment, planting more trees, reducing the dependency on ACs, avoid wastage of water, avoid polluting rivers. When it's done at a corporate level, broadly it is ESG. Now, if I can jump on and explain the ESG more from the corporate perspective, so then ESG is basically stands for, like we have already discussed, ESG stands for environment, social, and governance, which takes the comprehensive approach in monitoring the impact of the business based on these three factors: environment, social, and governance. It involves meeting with the relevant regulation as well as the implementation of diversity within and outside the organization. So uh, when where E, environment, stands for like how does well the company protects the environment, what are the variable steps it takes to mitigate the climate change, biodiversity, carbon emission, and how the impact of company is being made on the environment. What are the data that we can measure in the environmental level, which encourages business owner to start thinking ways to cut the energy wastage, water and its wastages, and which is not only become cost saving exercise but also good on planet. Similarly, a strong environmental score generally gives a indicates that company is more efficient. So like I'll tell you, in many of the companies where we are working now, gradually they've started shifting from the coal-based energy to the solar-based energy. So automatically they're reducing the impact on the coal, and then we are going more towards the renewable energy. Similarly, water consumption was reduced by having a proper rainwater harvesting system. A lot of effluent that companies used to discharge or over river, now that has been treated. And gradually, there are more and more companies coming with a solution where their products, if they're selling it to the customer, it has a lesser harmful chemical. So, like there are many, for example, many companies are there which are selling the organic products and things like that. So, idea at the environment level is that what is the impact company is having on the environment? Is it good impact or bad impact? Now, when we see this kind of thing, environment impact, it is not something new for us as an Indian. So a lot of us have been doing this thing, and if we follow the traditional way of living, typically assigned to the Indian values, we all are already doing a lot of this thing in our individual capacity. However, when it comes to company, many of these things were ignored. Like when I started working, I have seen that offices having fully covered offices, using the overuses of the AC, the electricity is running into the legs. There are no people on the floor, but still the lights are on, the ACs are on. Now, in last 5, 10 years, things have started changing where they are installing a lot of systems where if there are no people, the lights will start switching off, the computer screen started switching off automatically after certain amount of time. They've started switching off ACs just not just to save the cost, but as well as to reduce the impact on the environment. So what are the criteria that are covered under the environment? So broadly, it covers environment policies, the environment impact, what are the energy consumptions, intensity of the energy, carbon emissions that is happening, primary energy sources and how it is being sourced. Then what are the renewable energy intensity? Are the companies developing more and more renewable energies or not? About water management, waste management, how the different wastes in the companies are being disposed of, etc. So that is what covers under the environment. Similarly, if you see on a social impact, uh, so social covers the full-time employees of the company. What are the monetary and non-monetary benefits of the available to the employee? What are the attrition rates in the organization? What are the trainings and developments companies are arranging, and how many people are participating in it? Is it really benefiting the employee or not? Similarly, healthcare benefits, human right policies, is there any human right violation reported? How it is being addressed? Similarly, child and forced labor. Is there now? I guess in India, at least on paper, there is no child labor available. But still, if somebody finds out what to do next, how to address this thing, then obviously one of the major issues in the 21st century is the gender parity and ratio. Like, is there enough women working in the place? Are they giving opportunities to the women or not? Similarly, community and social work or the local procurement. So many companies have started going in the remotest location in the countries and trying to find out if they can provide environment to the different deprived societies. So the social impact basically covers how well the company is protecting and value the people and human resource. This is not only regarding the safety and equality, like traditionally we see in the 70s movies where the workers are demanding the minimum safety standard. Now the things are going at a level where are the companies is providing better opportunities to the community for a better society engagement? What are the trainings and development happening? And high society or high social score or high score on the S front implies that company is having safe and nourishing environment for employees, and such company tends to build a more attractive business culture, which in turn help them maintain lower staff turnout and better cost value. So if you'll see from the two aspects right now, what are discussed, environment and social, both are not merely a reporting requirement, but it's more to do with how companies are approaching its resources, be it on an environmental front and on a social front. So similarly, when you look at the G aspect of governance, so governance starts with the gender diversity on the board. What are the independence of the board? Are board independent enough or not? What are the separation? Is there a separation of power in the board or not? Like whether MD is the one who is taking all decisions or just there is a one person taking the decision. So those who are uh, aware about the current Indian political scenario, so there is always a allegations levying by one party to other that there is only one person taking the decision. So similarly, there are many companies where one person is taking all the decisions. I'm sure all of you who are in practice or in working somewhere might have experienced that as well, where only one person takes the decision, everyone else has to follow the order. Versus the good organization where there are segregation of power, like MD is reporting to the board, chairman takes care of the meeting. So in a way, the organization try and protects the structural system. Similarly, how the voting results are being declared, what are the gender pay ratio, like are the women and men paid getting payment equally, or there are different payment for them. There is an incentive pay for working better. What are the ethics and how the code of conduct is being done? Similarly, is there any bribery anti-corruption code implemented by the companies or not? And then how the corporate governance functioning are happening. So if you'll see, many companies which has raised the funding from US companies that are registered in USA or certain European countries, it is mandatory for them to adopt the bribery and anti-corruption code in addition to the all the listed companies as well. So every company adopts a policy and how to what level they are implementing it. And when it comes to governance part, so then you have to see that whether these policies are there on just paper or it is being implemented. So when the ESG audit happens, they generally go and check with the people that are they aware about the policies of the company, the employees who are ultimately going to deal under this work in the organization. Are they aware about it or not? So it basically talks about how equitably the venture govern in itself. Is there any issues related to business ethics, corruption, compliance that is taken into account? Because many time in India we have a typical chalta approach. So lot of things that is there in the books but are not being implemented in reality. So that is needs to be assessed. So high governance score generally indicates that our organization is compliant and ethical in its business decision, and good risk management has a strong appeal to the investor, customer, and supply chain. So broadly, like if you now see the ESNG, so we have whatever we've discussed, environment, social, and governance perspective, all this thing combined is more or less a very standard thing that we generally discuss. What is ESG? ESG is environment, social governance, where we are talking about taking care of environment, taking care of employees, taking care of your board, having a gender diversity, having a proper corporate governance, anti-corruption thing. So these are not something which is something that we have never heard of or not aware of. So point is that if this is ESG, how do we do the ESG? Like what next? How do we uh, like implement the ESG, and is there any law that is governing in the ESG in India? So typically, if you ask me any law governing ESG, my answer is yes, SEBI is the governing. But when I started handling the work of ESG, I realized that there are many more laws that is already governing the ESG. SEBI is just a next step of the ESG. So if you see, in India, we have not a specific law or individual law governing the ESG, but there are series of the laws. So similar example, we have Factories Act 1948, which talks about the governance, the taking care of the employees at the factory. Similarly, we have Environment Protection Act 1986, and that combined with the Air Water Pollution Act of 81 and 74 respectively. Similarly, we have Hazardous Waste Management rules of 2016. Obviously, the Companies Act also deals with it. SEBI, of course, SEBI is one of the major player in the ESG segment currently. Similarly, PMLA, there are different regulations now, starting with Minimum Wage Act, Bonus Act, Gratuity, and now the labor codes. So combining many regulations are somewhere touching the nerves of the ESG or somewhere handling the ESG. So broadly, when you discuss the ESG, these are the compliance with this laws. So what ESG talks about is doing the compliances or doing this thing on its own rather than when it is being made mandatory. So let's see and figure out like certain aspects of the companies where the ESGs are being touched. So one of the first thing that ESG is being reported is under board's report. So I'm not sure how many of you have seen the board's report, but if you see section 134.3 subsection N, it talks about that conservation of energy and technology and adoption and foreign exchange transactions earning in manner that needs to be reported. So section 134 talks about the board report, and 144.3 talks about the matters to be included in the board's report. So one of the important point in the board's report is the conservation of energy and technology absorption. So when you check the relevant rule, I've shared the copy here. So it talks about conservation of energy. Then the board needs to disclose what are the steps companies have taken to conserve the energy, what are the steps taken by company to utilizing the alternate sources of energy, and what are the capital investment on the energy conservations equipments company has incurred in the board's report. Similarly, on technology absorption, company needs to give a detail about the efforts made towards the technology absorption, the benefits derived from like the products improvement, cost reduction, production development, or the import substitution. Similarly, in case of imported technology, if imported during the last 3 years to be reckoned, then the company needs to give additional detail, such as the detail of technology imported, the year of import, whether the technology has been fully absorbed or not. If not fully absorbed, areas where the observation has taken place and the reason thereof, like why it's not done. And the fourth point that needs to be given is the expenditure incurred on R&D. So if you see, these are the mandatory requirement for all the companies, be it a private company, public company, listed company. However, unfortunately, 99% of the private companies never gives any detail here. They just give a standard line, which is copy pasted from a lot of other reports, which is like conservation of energy is not applicable, the technology clause is not applicable, or the board is taking majority efforts. But the point of discussion is that these are the mandatory requirement under the board's report. Now, I'll explain in the later half of the session, like why this is very relevant and why this is important. Similarly, the section 166, 135, and 149 of the Act also deals with other aspects of the ESG. So 166 talks about the duties of director, where one of the duty of the director is to take care of the environment and ensure that the impact of the company on the environment is not negative. Similarly, 135 talks about the CSR. CSR itself is one of the major criteria in the ESG. And similarly, section 149, which deals, one of the provision deals with the woman director. So one of the mandatory clauses for listed companies and certain companies with capital and turnover, the criteria is that they should appoint at least one woman director in the board. So these four sections primarily deal with the clauses of the ESG, or the uh, purviews of the ESG. Similarly, in addition to ESG, we have companies like we have SEBI, which is the major player under the ESG. So SEBI's regulation 17(1)(b) talks about independent director, and 34 regulation 2F talks about the BRSR and DRSR core. So I've just shared the copies of the regulation 34 2F. So it says that for top 1,000 companies listed on based on market capitalization, a business responsibility and sustainability report on the environment, social, and governance disclosures in the format as may be prescribed by the board from time to time, provide that the assurance of the board's report, business report, and sustainability report core shall be obtained with effect from in the manner as may be prescribed by the board from time to time. So 34(2) makes it mandatory for top 1,000 listed companies and certain other companies to mandatorily disclose the ESG implementation in the BRSR format. Now it further says that provide further that in case of listed companies shall also make a disclosure, obtain assurance as per the BRSR core or business responsibility sustainability report core for their value chain with effect from and in the manner as may be specified by the board from time to time. So 34 2F talks about three things. One is the BRSR reporting for top 1,000 listed companies. Then the first proviso says that in addition to BRSR, companies are required to give BRSR core. And then the second proviso says that in addition to BRSR core of the company, they have to provide the BRSR core for the value chain as well. I'll explain what is BRSR, what is BRSR core, and what is value chain. But thus the section further says that provided in case of remaining listed entities. So since it is made mandatory for top 1,000 companies, it says that in addition to this, for limited company, other companies including SME companies, uh, they may voluntarily disclose the BRSR or may voluntarily obtain assurance of the business responsibility and sustainability core for themselves and for their valuation as the case may be. Uh, and then this section further explains like what is my top 1,000 companies. So the market capitalization as on 31st March of every year, whatever top 1,000 companies are there, they are required to comply with this thing. Then what is BRSR core? So uh, BRSR core is a performance of key performance indicator as may be specified by board from the time to time. So we'll take BRSR core in next session, in next slide. And then the regulation further provides for the value chain. So value chain basically means a company's whatever the typically entities that are suppliers, so downward or upward. So either they are procuring from the company or they are companies selling to them. If that has more than 20% impact on its balance sheet or P&L, that company will be treated as value chain, and then they have to comply with the BRSR core requirement as well. So in addition to the top 1,000 companies, BRSR core is been extended to the value chain of the BRSR as the companies as well. So roughly timeline. So this is how the SEBI's clauses were introduced. So in May 2021, BRSR format was introduced by the SEBI, replacing the BRR. So prior to BRSR, SEBI had introduced something called as BRR, which was Business Responsibility Report. So in July 2023, this was made mandatory to top 1,000 listed companies by market capital, and the BRSR reporting is now mandatory for all 1,000 listed companies. And later on in July 2023, BRSR was when made mandatory, SEBI had introduced another circular making it BRSR core mandatory for listed companies. Now BRSR core is currently applicable to top 150 companies, and gradually they will take it to the other companies. Now, since we are discussing the BRSR part, SEBI, so let's look at the two circulars regulating the BRSR and BRSR core. So this is May 2021 circular, which was on the BRSR. So basically, SEBI through this circular replaced the BRR. If you read the clause number 2 here, it says a SEBI-wide circular 2015 dated November 4, 2015 prescribed the format of BRR in respect of the ESG parameters by the state company, which was more of a recommendatory thing, which was now replaced with this circular, and the BRR was replaced with BRSR, and then the SEBI has given a two formats under the circular, and it has asked top 1,000 companies to comply with this requirement. And so BRSR for top 1,000 companies was made mandatory from FY 21-22. So today, if you go to the website of any listed companies, or if you'll see any annual report of top 1,000 companies, you'll find the BRSR reporting being done there. In addition to this, in July 2023, this circular was introduced. Circular talks about BRSR core. Now, what is BRSR and what is BRSR core? So BRSR, or as the name suggests, Business Responsibility and Sustainability Reporting, is a reporting of the compliance of the ESG by listed company, and BRSR core is an additional reporting in addition to the what is being disclosed at the BRSR. So if you see the timeline here on point number 3.4.2, in 23-24, it was made applicable for top 150 companies. This year it has been applicable to the top 250 companies. Next year onwards, it will be applicable to top 100 companies, and by 26-27 FY, even BRSR core will be applicable to the top 1,000 listed companies. Now, what are the main ESG disclosures in the regulations? So the main focus of ESG reporting in India is done under BRR or BRSR. So this question that I generally get to ask a lot of time is that how do we comply with the the ESG in India? So typically for listed companies, top 1,000 companies like SEBI has made mandatory, the reporting is needs to be done. So whatever efforts companies have taken, we have to compile in a BRSR reporting and then submit it to the SEBI. But what about companies other than top 1,000 listed companies? What about, say, SME companies? What about the private companies? What about people like us, say, for example, practicing company secretaries? How do we comply with the ESG requirement? So typically, ESG is applicable to all of us together. It's not like applicable to just top 1,000 companies or anything. The reporting is applicable only to top 1,000 companies. So all of us can take an effort in improving the ESG of the country. Or at least on the governance aspect, or maybe on environmental impact or on social impact. So when it comes to top 1,000 companies, it is applicable. And if you see any top 1,000 companies annual report today, it's a part of their annual report where BRSR section is separately given. Annual report is shared with the shareholders, stock exchanges, and also published on the company's website. So even today, if you want, you can just visit any of the listed companies, maybe stock exchange website, search any listed companies detail, search, open their annual report, you'll find the BRSR reporting there. So now this question, what is BRSR? So BRSR is basically it's disclosures from the listed entities of their performance against the 9 principles of the NGRCB, which were issued by MCA in the background of emerging global concerns of the SDGs by the UN Guiding Principle on the Business and Human Rights. What is NGRCB and NGRBC and what is SDG? So NGRCB BC basically is a uh, NGRBC is basically rooted in the National Business Reporting Conduct, which was issued by the Minister of Corporate Affairs, and SDGs, United Nations Sustainable Development Goal. So BRSR enhances the corporate governance transparency and accountability on this factor, and BRSR is a type of report that is covering non-financial information. Now, BRSR report contains the organizational information parameters on the ESG and sustainability report. However, the real question that was asked by many people when the BRSR was introduced is that will people comply with the BRSR requirement? Because when you see the generally uh, anything that is not financial thing becomes the cost on the company. Like when you say BRSR reporting and asking company to provide the information that how many trainings they've conducted, what are the employees, what are the salaries they are paying, will it be like a productive work or a counterproductive work? Will the investors would be interested in it? Say, for example, if you see a company spending lakhs of rupees providing this data, would they be interested? So, genuinely speaking, when it was a non-financial reporting, earlier many promoters used to think that these are counterproductive and it's a cost center on the company. However, over a period of last 5 years and specifically post-COVID, this approach has changed completely. Now there are more and more investors are asking for BRSR reporting and the ESG reporting. So uh, and then companies and the investors and all the other stakeholders are now looking at the companies and checking that are the organization aware about these principles or not. So what are these principles? So 9 principles that are required to be followed by business are principle one, conduct and govern themselves with the integrity and in a manner that is ethical, transparent, and accountable. Principle two is provide goods and service in a manner that is sustainable and safe. Principle three is respect and promote a well-being of all employees, including their value chains. Uh, Principle four is respect the interest of and be responsive to all stakeholders and not merely the shareholders. Principle five is respect and promote human rights. Principle six is respect and make efforts to protect and restore the environment. Then principle seven is when engaging in the influencing public and regulatory policies, do so in a manner that is responsible and transparent. Next is promote the inclusive growth and equitable development. And last principle is engage with and provide value to the customers in a responsible manner. So broadly, this 9 principle together is the core of the BRSR reporting. So it's not a core of ESG, but it's a BRSR reporting in India. So any business reporting done today, the SEBI's format also on the BRSR reporting is divided into this 9 principle, and then there are details being provided under this 9 reporting. Now, if you see the format of BRSR, so it is divided into 3 parts: general disclosure, management process and disclosures, and principle-wise performance disclosures. So again, in the each disclosure, you will see that there is an overview of the entity's material ESG risk and opportunities and the approach to mitigate or adopt the risk. So any reporting of the ESG, the companies are giving it, whether it's an opportunity or it's a risk or it's a threat. Similarly, what are the sustainability related goals and targets and the performance against the same? So what is UN SDGs at a larger scale or at a earth level? Companies are developing their own goal about this sustainability, like whether they will be able to sustain the market or not. And similarly, there are environmental risk, social risk, governance risk, and then each companies are required to put their own assessment towards the risk. Like for example, say if currently the market scenario where we are that US is becoming hostile to our country. So if my business is dependent on US exports, then my risk will fall under this category where my business environment may affect me. Similarly, if there is a carbon tax being introduced, then my risk will form under the environmental taxation side. If there is an unrest or if there is a flood in the say northeastern region currently, and if my employees are working from northeastern region, then my social or the environment risk will be there. Similarly, governance risk are there if there is anti-corruption action being taken and where I may getting affected. So my entire disclosure will be divided on different aspects and the my company, my or basically company's assessment towards this risk. So similarly, BRSR reporting, when you see So it's not only the Indian BRSR reporting, but it also gets integrated with certain other international reporting. So there are many international reporting, but I've covered just four of them here, which are very important, or at least the prominent one. So first one is GRI, Global Reporting Initiative. Then we have Sustainability Accounting Standard Board. Then the Task Force on Climate Related Financial Disclosure, TCFD, and then IIRC, or International Integrated Reporting Council. So lot of information that we are providing under BRSR are already covering all the requirement of the international standards. It's just the formatting style is different. But once the BRSR information is given, many of this information gets covered. And now coming to the BRSR core. So BRSR core, just like BRSR, it's an additional compliance requirement, which is mandatory for top 500 companies as of now, top 250 companies, sorry, for previous year, and now this year it's for top 500 companies. It is introduced to be as for an assurance by a listed company with a ninth new KPIs. So this subset of includes the KPIs under the ESG attribute tailored with the Indian and emerging market contexts. New KPIs such as job creation in small towns, business transparency, gross wages paid to the woman were identified. Additional to an global comprehensive intensity ratio based on the revenue adjusted of the purchasing power parity was introduced. And similarly, the focus is on the Indian and emerging market, and additional KPIs have been uh, are targeting that what are the revenues and how the markets are being paid, because a lot of this thing which are being introduced in the market currently, the GRI and the BRSR reporting may not be suitable exactly for the smaller towns and smaller tier 2 cities, tier 3 cities as well. So the nine KPI identified on a sector wise is being made mandatory, and since it's a additional compliance requirement, SEBI is implementing same in the phase manner. So we have already seen the implementation stage. Right now, it's applicable to top 500 companies from this financial year onwards. Now let's discuss about the international things. So if you see whatever we have discussed till now, we have discussed about the BRSR and how the Indian reporting systems are working. So however, the Indian BRSR is primarily defined by the SDGs of the UN, or Sustainable Development Goals. So UN has identified 17 Sustainable Development Goals. So I've just shared the screenshot from the UN website of this 17 goals. Definitely, this goals basically forms the part of our BRSR initiatives or the ESG initiatives of the country. So these goals, some of these goals are like there should be no poverty, no hunger, everybody should get a good health and well-being. Everybody should get a quality education, gender equality, clean water and sanitization, affordable and clean energy to everyone, decent work and economic growth for the people, industrial revolution and infrastructure, reduction in inequalities, sustainable communities, responsible consumption and productions. Similarly, climate action, the life below water should be improved. Life on the land needs to be improved, peace and justice and strong institution, and then partnership for the goals. So combining this 17 are these sustainable development goals identified by the UN, and combining this with the Indian principles, the ESG requirement has evolved. So uh, now taking the international standards. So when SDGs were introduced, there are SEBI started its initiatives and made mandatory reporting in last couple of years, but there are many international organizations who are active. We have discussed one ISSB, or International Standards Sustainability Standard Board. So this was created by IFRS Foundation in the COP26. So there is uh, uh, climate meeting that is happening. So in COP26 in Glasgow, this were adopted. The idea or the goal of the ISSB was to develop a global baseline for the sustainable disclosure standards to improve comparability and reliability and decision of usefulness for the investors. So ISSB was created mainly from the investor perspective. And then IFRS introduced two standards, IFRS 1 and IFRS 2. IFRS 1 talks about general requirement for the disclosures of sustainability related finance information. So it was made effective from 1st January 2024. So 2025 is the reporting period. And since Indian companies are having April to March financial year, so for us, it was applicable from 1st April 2024. So this is the first year when a lot of companies have reported under IFRS Standard 1. It provides a framework for sustainability disclosures covering sustainability related risk and the opportunities. Similarly, it covers the governance, strategy, risk and management and metrics, connectivity with the financial reporting, and the IFRS 1 emphasizes more on the materiality information that could reasonably influence the investor decision. And it covers all the sustainability topics and not limited to the climate related topic. Similarly, IFRS 2, which is a climate related disclosure, it has also become effective from 1st January 2024. This was based on TCFD recommendations. It provides a disclosure on the governance of the climate risk, strategic resilience, including scenario analysis. There is a risk management process, the metrics and targets, scope 1, 2, 3, CAG transition plan, and carbon pricing. And also talks about the focused on specifically on climate related risk and opportunities. Okay, just one quick question to everyone. Like, I don't know if since we will not be able to communicate, I'll just ask this question and try to answer this thing. So there is something called a scope 1, scope 2, scope 3 way of reporting. Is anyone aware about the scope 1, scope 2, scope 3? Okay. So basically, when the companies are checking their impact on the market, so since we were discussing a lot about ESG, how the impacts are happening, what are the carbon impacts companies are having. So what happens if say I am instead of me producing something, I get it outsourced by somebody. Will it affect my carbon score? Will it affect my credit score? So we start outsourcing work there. How does it will be added to my ESG? So to cover with this scenario, there are three scopes being introduced: scope 1, scope 2, scope 3. So scope 1 covers everything that my company is doing. Scope 2 is everything that companies which are providing services to me are doing. And scope 3 is everything that my service provider is doing. So if I as a company A, whatever is part of my carbon impact will be covered under scope 1. If company A is getting supply from company B, so whatever company B is doing for company A will be added in the company A's calculation as a part of scope 2. And if company C is providing some services to company B, as a result, company B is able to provide services to company A, then company C's effective impact will be added to company A's reporting as a part of its target and reporting. So this is how scope 1, scope 2, and scope 3 reportings are being calculated, which is for the carbon calculation. Okay. Now, in addition to IFRS, we also have a GRI standard, so which is a global best practice. So GRI is basically Global Reporting Initiative, which is most widely used for a sustainability reporting framework. It focuses more impact on materiality, how the organization affects the environment, economy, and the people. So if you see, IFRS was more from the investor perspective. GRI is more from the impact that companies are creating on the environment. And it is updated with the universal standard of 2020. And plus, there are sector specific standards being issued by the GRI. So the key feature is that GRI is more of a stakeholder centric rather than investor centric. So it goes beyond the investor. It covers the employees, communities, and the governments, NGOs, and everyone. There is a double materiality concept where it looks at both impact on the company and impact of the company on the social and environment as well. So it's not merely one-sided reporting. The structure is that there are universal standards, GRI 1, 2, and 3. Then there are topic-related standards such as environment, social, and governance. And then in addition to that, there are more sector-specific standard under GRI, where you have oil and gas, agriculture, and certain other industries which are having its own specific standards. So GRI is widely aligned with UN's SDGs, Sustainable Development Goal, OECD guideline, and UN guiding principle on the business and human rights. So there is a Indian BRSR requirement, then there is a IFRS 1, 2, then there is a GRI reporting. So when you see international standard now, when GRI and IFRS are there, then what is the difference between two? So IFRS 1 and 2, that is more of an investor focused, which is focused primarily on the financial materiality, capital market reporting. Whereas GRI, as I've said, it's a stakeholder focused, which is a double materiality, broadly focus on the sustainability impact of the organization and the organization impact on the environment. So it's not like both are different, but both are complementary to each other. So there are many companies which are using IFRS plus GRI reporting today to ensure that the both kinds of reportings are being done, because the primary intention of both reporting though remains the same, that is to do the ESG reporting, but the actual impact is different. So these are an additional reporting done by the people. So, for example, if I've just tried to explain this within questions. So in GRI, we talk about how do we impact the society and environment. IFRS talks about how do the sustainability impact the enterprise value. And then together they give the full picture, which is about how the impacts are being created by the organization and the outside impacts are affecting the organization. And this is where I feel uh, you all as a CMA becomes very, very critical and ensuring that this can be explained properly. I'll just explain this thing and in a bit that how the CMS can help in this entire situation. So we have Madam here. So ICMI Sustainability Standard Board has issued ISSS 1 and 2. So ISSS 1 talks about the general requirement on disclosure of sustainability related information, and ISSS 2 talks about the climate related disclosures, though it's not mandatory as of now. But this also covers more from the IFRS thing, but modified to the Indian requirement. So ISS 1 and ISS 2 compliance becomes very, very critical. And now, since it's being issued by the ICMS sustainability standards, this is very much tailor-made to the Indian requirement, and then it covers a lot of information that is required without needing to read and interpret the international reporting standards. Now, relevance for India. So, the entire BRSR and entire ESG, why it's important. So BRSR core has been implemented now, top 150 companies and top 250 companies are reporting currently, and the assurance is now made mandatory. Now, if you ask me what is assurance, then assurance in the BRSR format or in ESG is more like an audit. So there are two kinds of audit. One is limited assurance and one is reasonable assurance. So there are two kinds of audits are there, and audits in ESG is called as assurance. Currently, very big organizations are doing the assurance work, but gradually, as in when it starts spreading, they will need more and more people to issue the audit report and to the audit, because whatever nine principles we have spoken about, whatever BRSR core, the impacts, the impact at the value chain level, there are more and more number of peoples required in this entire process. Currently, maximum team are doing the reasonable limited assurance only, where they are just giving the limited information, and rest of the things are still declaration based assurance are being given. But as and when the awareness are increasing, people are not accepting the limited assurance and they need a reasonable assurance, and they are asking for more and more information on this thing. So ICMI's SS1 and ISS 2, which are the guidance note, is primarily aligned with the IFRS S1 and S2, but contextualized for the Indian business. So CMA as like professionals now acts as a bridge between two, where they can help the Indian businesses in the disclosures of the IFRS standard, provide the compatibility to the global investors, as well as help board in implementing the financial impact on the sustainability risk. Because when the business starts, initial period, they don't look at all this stuff that are affecting them on a global market scenario. But as in when the business starts growing, they need these assurances. And currently, the companies and the organizations that are providing this thing are charging fees that is way higher than maybe the turnover of a lot of these companies. So that is where they are looking at a professionals who have understanding of this industry and can help them in the reasonable level as well. So this is where the BRS are currently increasing. Now, why BRSR reporting or ESG reporting is important? So ESG reporting is not merely the reporting like any other kind of reporting, but it raises the corporate transparency, it strengthens the risk management, it promotes the stakeholder engagement, and it also provides the important communication with the stakeholders. So more and more, if you see currently, the current scenario where if you'll see any companies BRS are reporting, we'll take the practical example as well with one of the companies that I've taken a screenshot of. You'll understand what are the trainings they are doing, what are the risk management they have, what are the areas they've identified as a risk, what are the areas they've identified as an opportunity. So it's a complete exercise, it's an overall exercise, and the clients with which I have worked with, I found out that management started thinking on a perspectives that they've never thought about it, because it's a very systematic way of approaching it. So merely an Indian mentality is definitely pro ESG, where we are taking care of environment automatically. But when you see and when you have a systematic checklist available and when you try to implement it, this is where it becomes a very important tool for all of us. So uh, this is where the ESG becomes very critical. So practical example I was talking. So this is what I've taken. I've taken a screenshot from the Infosys website. So Infosys is one of the company that is to whom all this ESG is applicable. So there's a screenshot from the Infosys ESG page. It talks about environment, social, and governance, where it says that environmental wise, its goal priority is to serve the preservation of our planet by shaping the technology solution. On social front, they say that serve the development of people by shaping the future of meaningful opportunities for all. And on governance side, they're saying that serve the interest of all our stakeholders by leading through the core values. Then these are the screenshot from the ESG annual report. So the para on the front page talks about Infosys Integrated Annual Report has been prepared in accordance with the International Integrated Reporting Framework (IIRC), developed by the Integrated Report Council and GRI standards and International Financial Reporting Standard (IFRS). The reporting also includes the BRSR prepared in accordance with the guidelines issued by the SEBI, and they've also mapped the contribution to the SDGs or Sustainable Development Goal of the Infosys ESG report. So also in addition to this, like the thing that we've discussed, BRSR follows the national guideline for reporting of business conduct principles, which are on social governance. So broadly, if you see the NGRBC is the Indian guideline, which is the base for Indian reporting. Linked with the GRI, RFS, and the SDGs is what the reporting format is, what the ESG is. So I'll just quickly run through the certain sections of the ESG reporting done by the Infosys. So there's a screenshot of the section A. So there are multiple sections in which the reporting is divided, BRSR. So section A talks about the general company information. So it starts with very basic information, which all of us might be having it. So it starts with the CIN number, listed with the name of the company, year of incorporation, register office, corporate address, email ID, telephone number, paid up capital, name and contact detail of the person to whom reporting needs to be done, the reporting boundaries, who is the assessment or assurance provider, and the type of assessment done. So if you see BRSR core is a reasonable assurance, and BRSR select BSR and indicators, they were limited assurance. So assurance basically here is, like I said, it's an audit, and reasonable assurance means it's a detailed audit, and limited is, as name suggests, it's a limited audit done. So lot of areas where they do the detailed audit, and certain areas where they cannot provide the detailed information, or the people cannot go and check those implications, they are giving the limited assurance audit. Uh, So now coming forward, so if you see there are different sections. So one of the sections which I've taken is the employee part. So it talks about details at the end of the financial year. So that reporting of the employees are divided into five different categories, which talks about permanent employees, other than permanent employees, workers with including differentially abled worker, and then there are permanent and other than permanent employees who are in the other categories. So if you see permanent and non-permanent employees, again divided to male and female. Similarly, differently abled employees, like what are the people with the disabilities are being employed. So people without disability and people with disability, and then there are what are the permanent employees in that category. Similarly, the one that I was talking about, risk and opportunities. So there is a disclosure where it says that risk of overview of the entity's material reasonable business conduct, and indicating the business conduct of the social sustainability issues pertaining to the environment, social and governance. So what are the areas they've identified? So for example, on this page, they've identified climate change, So it's a risk or opportunity for them. It's a risk. It says that climate change risk are increasingly manifesting in our business as a strategic, physical, and transitional risk, which, if not managed adequately, can affect our operation and reputation profitability. And then what will be its impact? So they say that it's a negative impact because increased operating costs meeting the environmental standard in line with the evolving regulatory requirement. Similarly, on the environment front, they say that engaging clients on a climate action through the solution. So for them, environmental issues is an opportunity because it can increase their revenue. It can savings from use of lower emission resources can help them, and the impact will be on a positive side because it's scope. There is a scope to improve the company's competitiveness and capitalization on evolving client preference by leveraging their expertise in sustainability, lower carbon transition, digital IT support. So similarly, social front facilitating best-in-class employee experience. Similarly, tech for good platforms. So each criteria is being provided by the companies, which they are identified as a issues, whether there is a risk or opportunities. Rationale for this, if they are finding as a risk, then what is their approach towards mitigating the risk, and what will the financial implication, whether it's a positive, negative, or neutral. So similar, all these things are there. Then there is a principle-wise reporting. So I've taken a screenshot of principle 6 from the annual report. So you can see the principle 6 deals with the business should respect and make effort to protect and restore the environment. So one of the major impact is the electricity and water consumption. So uh, the Infosys data is available, which is the energy consumption from renewable sources and non-renewable sources. So there's a total electricity consumption of 5,82,411 is on the renewable source in current year, which was 485,753 in previous year. And from non-renewable source, it was 3,12,952 in last year, which has been reduced to 210,057. So their total fuel efficiency, fuel consumption, they are reducing dependability on non-renewable sources and moving towards more and more towards the renewable sources. And similarly, the water consumption intensity, energy intensity areas, what is the energy intensity per rupee turnover implications, and all these detail are need to be provided in the reporting. So similarly, all 9 principles, there is detail about what is the water being used in the fiscal year as compared to previous year. Is it increase, it is decrease, and how much purchasing power parity, water consumption is there, revenue adjusted. So all this information needs to be given in the reporting. So what I have realized while preparing and working on this thing is that um, there are many such information which companies are not preparing because they are not aware about it. So when it comes to bigger companies, they are still this information are available and they are preparing it, and there is a data that is being prepared. But a lot of this information are there in the positive side for an organization, but they just are not aware about it. So our role becomes very, very critical. So similarly, if you'll see principle 9, business should engage with and provide the value to their consumer in a responsible manner. So then it asks for like describe the mechanism to place and receive this thing, number of turnover that is applicable, number of consumer complaints in respect of all data privacy they've received, any advertising complaint they've received. So any problem that we highlight to the company, they need to report in their reporting format, like on a consumer perspective. So all 9 principles they have to report. Now the real question, if you see this kind of reporting, the real question is that how much information is true? What about somebody giving some wrong information? What about somebody saying everything positive and not managing it correctly? How do we control this thing? Because ultimately it's merely reporting. Reporting is done by the company on their own and through the reasonable assurance by an auditor. But what about this? So that is where the standing committee on the finance, which is currently going on the Lok Sabha, they've submitted their report on different aspects. One of the aspect was the ESG. So on the ESG reporting, they've highlighted one of the bigger issue that is a lot of our companies are facing is the greenwashing, inconsistent adoption, lack of ESG oversight in the MSMEs. So greenwashing is, like name suggests, basically uh, the compliance doing for the sake of doing the compliance. So like companies are calling the board meeting and they're not actually conducting the board meeting, but on paper they're showing that board meeting is done. Similarly, on the greenwashing, it's the risk that people are, the committee has found out that there are many companies which are just reporting without doing the work. So for example, training. they've called for the training, they've just conducted the training without actually conducting the training. So employees are not getting benefited. The second issue is inconsistent adoption, because when it comes to BRSR and when it comes to ESG, there are multiple standards, multiple organizations. In just less than 1 hour, we have spoken about 4 to 5 different standards. So it becomes very difficult. And the last is the issue that is highlighted is lack of ESG oversight for the MSMEs, because even today there are many bigger organizations are there which are able to find out these issues, but when it comes to MSMEs, they are still not aware about it. So this was another concern that is highlighted, and then as a result, they've said that if government can establish a ESG oversight body which defines the ESG duties in company directors' fiduciary responsibility, and ask companies to create the ESG committee, and that includes ESG and MC annual report. So whatever listed companies annual report or private companies annual report, they've asked if every company can create a body, and then they have a ESG committee, and then they report it in their annual report. What are the roles of ESG committee, just like a CSR committee? And then there is an ESG oversight body. So like we have SEBI, the committee had requested government to introduce the ESG oversight body. However, government said that the ESG principle already exists in, it is implicitly there in the Companies Act, and then they have already provided a lot of other things, including gender diversity, directors' duty is already there, and then also there is a CSR requirement is there. So government denied the requirement for the separate ESG body as of now, but they've noted a lot of other concerns issued by this committee. But committee in their conclusion said that the committee, while reiterating their call for the proactive and robust and enforce-oriented paradigm for the ESG governance, they urged the ministry to establish a dedicated ESG oversight body for actively combating the greenwashing through specialized forensic expert formation of sector-specific guideline for MSMEs, and ensuring that the continuation data and deterrent provision for the fraudulent ESG claims. So though ESG is there for now almost 5 to 7 years in India, but still we can say that it's still at an nascent stage. So maybe it will start improving. So, but broadly, what we have observed now is that there are more and more people becoming aware about the ESG, and the more we speak about it, the more we realize that okay, the companies are not ready for it. And nowadays there are more and more investors, specifically the foreign investors with a large chunk of money. They are looking for an organization that is ESG compliant. They are looking for an sector that is not having negative impact on the environment, or that is something that is providing solution on the ESG front, rather than the traditional business organization with higher profit. So this is where the ESG become effective. Now, just last 5-10 minutes, I'll try to cover how ESG becomes important at a micro level, because whatever till now we have discussed it all about the macro level, the top 1,000 companies, etc., which I'm sure many of you must have read, but we don't know how to do it at a smaller level. So maybe at an organization where we are working with, so and considering specifically, since you all the audience today is in cost accountant, so we can start tracking the energy consumption data of the company across the department. We can provide the cost benefit analysis, like the traditional versus the LED implication or solar automation importance. Maintain the GHG emission data sheet, scope 1 and scope 2 basics. Maybe scope 3 we can do it later stage, but at scope 1, scope 2 can be started. Monitor water consumption and waste generation, prepare monthly utilization report, help design the waste segregation and recycling sheets, implement this as a policy level, benchmarking environmental KPI, example, energy per unit of output, water per employees, and uh, considering cost being a part of your core expertise, this becomes much easier to implement. Similarly, on social front, maintain the dashboard for the employees, training hours, gender diversity, attrition, absenteeism, statutory compliances with labor laws, costing of CSR projects, data on wages versus living wage benchmark, the area where the company's offices are there, any suppliers diligence that is required regarding child labor, fair wage certification, etc. If possible, ask organization to obtain these certifications from their suppliers, saying that there are no child labors are there, they are in compliance with the legal requirement, etc. And start building a simple stakeholder feedback log to capture the employees' community input. So like if there is any complaint from the employees, whether it is being noted and taken action against or not. Similarly, on governance front, maybe start finding a checklist for the BRSR and BRSR core, maintain the board and completely compliance calendar about the board meetings, quarterly meetings, compliance requirement, start working on the basic ESG disclosures. So the draft which I've shared in the today's session, also the draft is available on the SEBI's website. So maybe whatever data is available, we can start preparing it, start comparative analysis with the peers. So if organization not listed and if there is a similar industry organization listed, we can just have a comparison analysis and then we can look at the policy implementation about code of conduct, whistleblower policy, diversity policy, and then help companies in then with the internal audit like sample ESG assurance, data verification, etc. So once this is done at a smaller level, and then they start looking at a higher level companies, that becomes easier because ESG today is not merely a data compliance or environment compliances. It's more like in a lifestyle of the company. So, and like I said earlier, ESG is today becoming an unprecedented, like it has started growing unprecedented way. It is becoming an emerging trends. Many companies are now facing more pressure from the investors to implement more ESG. So what was happening genuinely, maybe 10 years ago when we were working on the corporate governance, people were not very keen on spending money on corporate governance, thinking that it's a waste of money and you are just asking us to spend more money. However, now things have started changing. They've started asking that implement ESG compliances, and nowadays private companies with the investors are now super excited and forcing companies that please make sure that the companies are ESG compliant. And now I've started working with a lot of companies where I've become an ESG consultant, just helping them in implementing the ESG policies and the ESG reporting. Though it was not something that new they are doing, but it's just the reporting format that has become important. So while Indian culture has integrated ESG as a default mechanism, we don't need to tell anybody, please stop wasting water or please have the natural light rather than getting into the artificial light. But now the way it has been implemented, it has become the kind of lifestyle rather than merely do what you like and ignore what you don't. So how CMS can add value? We've already discussed costing data integrity risk assessment is being the core subject. So you can turn that ESG into numbers, ratios, and dashboards, help them in tracking this data, help them in understanding what are the impacts it can create in the market. And uh, so I've identified four core areas where you can identify the activities of most exposed to the climate risk, pinpoint the operations and the contribute to the carbon emissions, evaluate the cost benefit of sustainable alternatives. So if say, for example, traditional electricity versus solar energy. Now it might be costly solar energy for initial year, but maybe if we can give a cost benefit analysis, like in 3 years it will become free, 5 years it will become free, plus it will be always available versus the risk of energy going, etc. If the cost benefit analysis is available and if ultimately this helps them, so instead of merely complying, they can navigate and start thriving in the business economy. And additionally, many banks, many organizations are giving additional discounts to the companies that are ESG compliant. So then it becomes very easier. So just last point, call to action. So based on whatever we have discussed, I don't know how much we can discuss on this sustainability part in 1 hour, but broadly what I tried to cover in today's session is that what are the things we can look at when it comes to ESG. So the first thing we need to do is that start taking the data capturing and the dashboard, create the dashboard, learn the BRSR and BRSR core. These are something that maybe there are many courses available, but I generally ask everybody just go and pick up the annual report of the listed companies and start looking at it. Start supporting the boards and committees with the BSC, basic ESG compliance tracker, and gradually expand this into scenario analysis, impact costing, and ESG audits. This is way easier than it sounds as of now. So I hope this becomes easier. So starts with the smaller companies and then maybe we can grow at a larger stage. So that's it from my side. Any questions, please feel free to ask. We'll try to take it. I don't know if you have a time. Aditi Madam, Dibenduji, if you have questions, we can take it up else. This is what I wanted to cover.
Yes, sir. I think excellent presentation, sir. We have got a very good feedback of your presentation. So one or two questions have come in the chat box.
Okay.
Like we have published also. First
Okay.
question is many companies lost their market value because of lack of governance. Even
Yeah, that's true.
then they have good business performance. What are your views in regard to that?
Okay, yeah, so that is one of the biggest concern today because earlier people used to not take the corporate governance seriously, but now there are chances where there is if there is any risk. Recently, we have seen the IndusInd Bank. So if there is any problem that has been identified on any of the governance level, they are facing the higher risk. So that is why investors are now looking more towards the companies with the ESG compliant than the other way around. So it's like one of the very, very important factors.
Right, sir. So another question has come, like BRSR is applicable to top 1,000 companies,
Right.
and apart from that, do you think any subsidiaries of MNCs and suppliers,
Hmm.
those who are in the value chain, they have been kept as voluntarily? Uh, you can do that ESG audit.
Okay.
So,
Okay.
so what are your thoughts like
Okay. So yeah,
regarding to
as
that?
of now, it's applicable to top 1,000 companies. So basically, like I said, ESG is something that is all of us are supposed to do it. But when it comes to reporting, it's applicable now, being made through SEBI. So it's top 1,000 companies. Suppliers to Indian or MNCs, if they are part of that 1,000 companies or BRSR core, it's applicable. For rest of them, it's not applicable or it's not mandatory. But what is advisable is that if we can implement it, I understand for organization it may be a cost, but we have seen more benefits than the cost. So it's applicable to all of us today. It's not just made mandatory. So any organization, any company that needs to implement the ESG, this is the right time to start. And what we have observed is that the companies have the private companies when they are raising funds, in addition to everything, they started adding this thing, ESG compliance is a part of the presentation. When they are going to the banks, they've started adding that ESG parameters is a part of the presentation. They started getting higher discounts on the bank loan rate, etc. So it's something that is advisable to everyone today. And this is where I feel this is one of the very amazing initiative by the CM Institute as well, that this needs to be implemented from bottoms up level, because one of the challenge with ESG is that it has become such a big fancy thing that only top companies are doing it and rest of the people are just thinking that it's something that they are not supposed to do it. So once it's implemented by us, the professionals from the bottoms up level, this will become really effective. And if you see, a prime minister has spoken about our carbon neutral net zero goal, and then we are talking about 2047 India becoming the developed country, and 2070 is our net zero goal. So all these things are part of that growth story. So because government wants companies to adopt this ESG principles, ultimately we are getting more and more encouragement through this way, so it's applicable to all of us now.
Right, sir. Sir, in regard to another question comes in, like you have mentioned about the various aspects of this sustainable finance, covering the
Right.
green bonds, ESG funds. What do you think about India's climate transition of net zero target of 2070? Do you feel India can achieve that?
So genuinely speaking, when first it was announced, I felt it was impossible. We were just talking in the air. But the way things have changed in last few years, at least last 2, 3 years, which I have seen, I'm really hopeful, because the way many companies are coming up, many we are started adopting this solar energies. We've started uh, getting to explore the different areas. So now 2070 looks possible, and it may happen because once the transition starts happening, a lot of things will get the compounded return. So it may happen that we may achieve this prior to 2070, but definitely it depends on a lot of other aspects. So as of now, it's like a long way to go.
Right. And in regard to, sir, this our 2030 SDG achievement of whether we can achieve that also, that even target of Sustainable Development Goals of 2030.
2030 looks very difficult today,
Yes,
but
yes.
at least the idea today is that at least whatever we can do it, even if say it's 50%, 70%, it's always better than what we were or where we were going. Because
Hmm.
specifically in tier 2, tier 3 cities nowadays, a lot of say rivers are getting polluted. Many of us have seen the situation of Yamuna River, etc. So idea is that at least if we can start improving on certain aspects, so One of the things that government started feeding 80 crores people. So a lot of stuff are being taken as an initiative, but not sure how much we will be able to achieve.
Sir, in regard to this artificial intelligence, which is a buzzword now, and
Yes.
this blockchain and IoT, what do you think technology plays in the sustainability governance and reporting framework in India? Do you feel any changes required or changes is happening with this adoption of new technology?
So definitely technology is going to be useful, but I'm not sure to what extent and how it will be useful as of now, because AI and all are there to provide certain basic information from the background. But as of now, it's still at the very different level altogether. So I've not seen AI helping in a lot of other stuff, but definitely uh, technologies are reducing the carbon footprint. For example, say if today's session, if not without the AI help of technology, we might all be meeting. So all of us would have traveled to a venue. So when we adopt to the technology, it definitely saves in terms of certain aspects. But to see the impact that it will create, we need to wait. But one thing that AI has started doing is that the reporting has become much easier. Today, now you just need to put the data and then it starts generating the information. So many companies I know have started using the AI in predicting the future consumption, the impacts, the risk, etc. But yes, it's still a long way to go.
Right, sir. Sir, recently, sir, we have got some CSR mandates from the Companies Act. What do you think whether this has impacted the sustainable development of the entire country as a whole with the adoption of more CSR activities as
Yes,
per
so
Companies
CSR
Act?
is definitely CSR is one of the most important aspect of this UN Sustainable Development Goal. So initial years, I have seen companies were not very serious about the CSR, except for top 100 companies. Many were just doing the CSR on paper, or maybe just spending money somewhere without looking at the impact. But gradually, the impact and awareness has started becoming very real. I have seen even investors are getting engaged into the CSR activities, and they are interested in like what impact they are creating. So it's not merely now paying the money, but it's about what impact it can create. So I've seen there are people who are going in the remote villages trying to figure out whether their money is being utilized for the right purpose or not, because sometimes spending money becomes very subjective. What I buy, what things I buy as 100 rupees might be bought at 500 rupees and being given to 5 people. So we may not know the impact by merely looking at the money, but now CSR has been gradually started improving the impact on that level.
Right, sir. I think last questions from our end is that the role of professionals, as you have mentioned in your presentation also, that
Mm.
the role of CMAs are immense in this current
Yes.
scenario of BRSR and other regulations. So, can you specify the road ahead as many of the regulators, including SEBI, RBI, and IRTA, are various strengthening various activities and parameters for ESG disclosures and green finance governance. So, how do you
Yes.
feel that the role of CMAs would be paramount in the coming years? What is your thoughts
So
in regard to that?
So genuinely, I'm a company secretary, so I don't understand cost much. So I realize that okay, when I do the ESG and when a CM is going to do the ESG, though it will be the same work, there will be a very different impact that cost accountant can create, because 90% of the data when I am doing the ESG reporting, I have to rely on some other person. So that's where cost accountant can become a very useful role, because each and every impact of the cost on the different areas like say water consumption etc becomes critical. Since we as a professional are always closely associated with the organization and management, it becomes easier for us to report. And most importantly, today even SEBI and all the government organizations are still figuring out how to do the ESG reporting. So one of the common myth between us as a professional is that until unless there is a specific report or a certification, we don't add value. But in reality today, ESG is an evolving what you say area of growth today. So there are many smaller places like you said about green bond, its implications, the BRSR reporting for a value chain, and many other areas where the organization are looking for people, but they are not aware who can do it. So then the work goes to the just maybe top 5 or top 10 people in the market. So as soon as we start spreading this wing, it will not only increase our work, but it will increase the scope for everyone. And then even the companies will be happier to go to the other people. Currently, I know many companies which are like left with no choice and just to approach the same person again and again because there are no other one who's taking the work. So it's about being aware about the areas, just being aware about what is the ESG and how we can add value. And then there are more and more opportunities will start opening.
Right, sir. Thank you, sir. I think it was a great, uh, I think, session from your end. You have given the practical insights, and many of the participants in the chat box has given accolades and appreciation of your presentation. We thank wholeheartedly from our SSP for your participation. And with this, we close to today's session. Before we close, we thank our other persons, those who are associated with this event. We thank Dr. Aditi Rasgupta, Joint Director. She is always helping the SSB with her erudite presentation and many of the activities she is participating. We also thank our SSB board members, especially Dr. Ranjit Krishnan sir, for just associating with the speaker with the SSB. And we also thank our chairman, CMA Dr. Ashish Satte sir, for always encouraging us to organize more these online sessions every fortnight. We also thank our president, vice president, and other council members for always encouraging us, motivating us. We also thank other departments, including IT, CPD, and other departments. We hope that our next session, which is the 41st, is Vasudhaiva Kutumbakam series. After 2 weeks, that is on 26 September, would also be graced by all the participants. We are having our fifth batch of ESG certificate course. I request all the participants to join the session. We'll be starting from October onwards. We will be releasing our 26th Sukhino Bhavantu, our monthly newsletter, on 25th of this month. We hope that you will appreciate and read our various columns. With this, we close today's session. I thank everybody for their participation. Thank you, sir.
Thank you, sir.
Thank you. Thank you, everyone. Bye bye.